Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn & Associates with your metals market flash update. And this is for your weekend edition, which is a little different than the daily editions for Friday, the 28th of July, 2017. And what's different about it is that we do the weekly charts rather than the daily charts. So it offers us something a bit different. Now, there is a bombshell event that's happened today. Actually, there's a few of interesting events. Number one, of, I think, importance is the fact that just moments ago, before I'm doing this recording, Reince Priebus has now resigned as Chief of Staff at the White House, and John Kelly, four-star general from the Marines, has stepped in, and I think that's a good change. But there's a lot of changes. You know, we've changed now the communications director. There's other people changing. The Trump administration is getting its way for non-politicians, and the one thing that has stayed is this president is no different than the TV personality. If you don't do your job the way he defines you doing the job, you're out. And let's face it, there's a lot of failures going on. How Sessions has stayed in this long is a little bit beyond me, but it's because he's under investigation, that being the president under investigation. But he's seething. He would have never chosen him, as he said, for the reasons given. Doesn't matter. The gold market's absorbing all this, and the gold market had a good piece of news today. North Korea fired another missile, and this is great in its own way. Let me explain by that. It's terrible, of course, that they're getting the ability to attack us. It's great because it's shaking up all of Asia, and while we were looking at China grabbing a stronghold, if you think about it right now, China's on their doorstep and can't control them. What does that say? South Korea, new, I guess, president elected just a short period of time ago, right? One of his first orders, he didn't even know the THAAD was being deployed, the THAAD missile system, and suddenly what does he want? He wants more of them as of today. He's setting up a meeting. This was came in right off the Wall Street Journal News, Dow Jones Wires. Now he's looking at it. Why? Because that missile got really close to where? Japan. Japan's up in arms over it. So the one thing that happens is these things have their own way of taking on problems and where things are going to go. But those two elements are certainly not bearish for the metal markets. And the dollar dropping this week, lead stone down to 93 important. Would you believe you're closing here at 117.91, almost 118 in the euro? So these are all big time numbers. And the energy market has shifted gears into a more bullish stance with the help of the Saudis cutting oil. And this coming week, by the way, OPEC is now calling in the members that are not in true compliance and sitting them down. So none of that is bearish information. When we go to a gold monthly bar chart, remember I wrote my gold report. I'm probably going to write another one this week, by the way. And I wrote then that I was hoping not to see the market take out this low. It came down this week to a low of 1204, for the month, 1204 rather. I wrote the report this month. Hasn't gone back there, and the key is to get over these numbers here, the 1232 and so on, to give yourself the upper targets that might be in play of the 1350s. You're not there. You're in the middle of still stuck on the monthly chart, and you're finishing the month up unless you get a monster break on Monday where you're over that 18-month moving average of closes. Do I look at monthly charts to trade? I don't. But what I do look at are weekly charts all the time. And on the weekly charts, if you take a look at the current pattern, you're still in a down thrust. From, I'm going to call it 1287 down to 1209.70, and you're getting a bit of a bounce. You're up to the 1268.40 number on the week. You could argue, and I've made this clear during the week when I did my daily charts, that you're caught between 1295 to, let's call it, 1204. You're about halfway in that in the 1250s, and now you're starting to stick your head up a little more as the market's moving on. When we go to the swing line, you got a 1295.20 to 1204, and you're back up. And you can see that seems to be the trading range that we're currently caught in. There's also a weekly bias in place now until the market gets into the first week of September. So we have a market that on a seasonal basis, doesn't mean it has to, but often rallies from the end of July into the beginning of September. Those aren't my ways of calling it. If you go to the Moore Research Center and you look at their probability studies, that's where you're at. Be it a bull year, bear year, it doesn't matter. That's what the market often does. When we come to the weekly chart of moving averages, the market's over the 18-week. It found support at the 100-week. When we come to the Bollinger Bands, the market's traveled from the upper Bollinger Band to the lower Bollinger Band. And remember, these are weekly bars, and now it's back up here. Is there a trend? No. Is there sideways action? Absolutely. And it's pretty interesting how the Bollinger Bands are labeling the range very close to what I had. They're saying it's 1295.80 to 1212.80. I thought it was 1295, 1204 on just the highs and lows extreme. So that's pretty good. When you come to the stochastics, momentum is up. So what we have is bias up at the end of this week because the market is what? Over the 18-week moving average of closes. Momentum is clearly to the upside. It has not got a trend in terms of swing lines, and it's caught more or less in a sideways profile here, but with upside bias. When we come to silver on the weekly chart, you have a pattern of lower highs, lower lows. Okay? Downtrend. The market has got momentum that has turned up. The first resistance point is the 100-day average of closes, and that has stopped this week's rally almost just on the button. It's very, very interesting how that all happened. The market has to clear 1686 in order to negate this pattern, and its resistance next one is going to be at 1697.5. So trend down, bias down until you take out 1686, but divergence because momentum is leading price. And if you're a believer like I am that momentum does lead price, price doesn't lead momentum, that's what you're fighting. Does not mean this market's in an uptrend. You're not. In the copper market, a blowout week to the upside. This market went out of nowhere, blasting through the upper Bollinger Band, closing way above it, and momentum pointing up. So what has taken place is the market is looking at a combination of China having a better GDP number than the market thought. Today's U.S. GDP really didn't hurt this market. It came in where the markets thought. Where the weak part of the data came in was, again, wage inflation. If you looked at the wage index, it's just not there. So that keeps it going. It keeps the Fed somewhat on hold, and other parts of the world where their economies are still doing pretty good. In fact, if you looked at Japan's, it was strong. So you're getting your move. This could all end up being a trading base for the copper market for some other price level. I don't see it based on the fundamentals of terms of supply. But when I look at two parts of supply, I do see still the Grasberg situation taking place in Indonesia. We keep hearing over and over about miners not working, and we get these spot strikes. That hurts the supply coming onto the market. The demand's pretty good, and if China's got a red-hot housing market, that explains part of that. In the platinum market, this is a market that could get up and go, but it's not there yet. What do I mean by that? You have a pattern on the weekly chart of higher lows. Today's high took out the previous, so you got higher highs. You did not close over the 18-week moving average. So the trend is up, the bias is down, momentum is pointing up. A market that's fighting a battle, again, at the what? Look at the red line. That's the 18-week moving average. It's been doing this since March. It fights it, it fails, and it stays under it. Let's see if that is going to remain the case. When we come to the next chart here, the palladium chart, it's bullish. The market has a pattern of higher lows, higher highs on the weekly chart. That's bullish. It's over the 18-week moving average. That's bullish. Getting under 849 would negate that pattern on the swing line, and momentum is still pointing up. So I see everything on this chart is still friendly, not bearish. Dollar index, toilet, toilet, toilet. riding the lower Bollinger Band with an embedded reading that kicked in at the end of May, hasn't given itself up, momentum just staying locked in on a bearish mode. We had a shot this week to reverse that. The data that came out the past 2 days stinks. It's that simple. The market's unable to stay up. We've seen that the stock market, a lot of people think, in fact, the market is saying maybe valuations have finally come into play. You know, we've been crazy valued for a long time. Why does it suddenly happen on this Thursday and Friday? And if you look at the break, if this is the break in the market and stocks, watch out, because that means you got even better action about to happen. Let me talk to you about what I look at sometimes during the day. There are times when I get my points off of what I teach in my charting course and they don't get hit. And I'm always looking to see, do the pivot points offer some number to either come in or get out of a market that I might not see elsewhere? And what is it? Pivot points find a center line, and from that line, 2 numbers above it, 2 below it, based on a formula that uses the previous day's high, low, close. Now, I used to do this formula by hand for years, and of course, then you can computerize everything, and we did that, and we put it on our charts on a regular basis. If you were to sit in my office, you'll hear somebody talking about a pivot number on a regular basis. We talk the same way about our price counts. You hear us talk about that when I do the offerings on it. And this is another tool for your arsenal. I've put together 2 videos. And for the in and out type trader, this is what you want to look at. It's certainly a tool that's got a lot of merit. I'm doing a 3rd video. I've told you this for a couple weeks, and I'll do it when I feel like doing it. And I'm going to tie together momentum with this, and then that'll be a special offering to some of you as well. How do you get this? Because you want to see the first 2 videos to get to the 3rd. You give us a call, and it's all free, 866-973-2077. You can go to our website, sign up for our free offers at www.iraepstein.com. If you're watching me on YouTube, you're going to see an icon right up here, and on that icon, click at the forms. It will appear under us on many websites. It says, click here for Ira's free market offerings. It's that simple, folks. So take advantage of it. I think you'll like what you see. Remember, that's how you get to it. I'm Ira Epstein. We'll send it by email to you as soon as we hear from you. Take care now.